Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. Today we will talk about Triterras, traded at Nasdaq, ticker name TRIT. Well, Triterras was analyzed already at our channel at 24th of January, and it's really actually nice to see that for those who followed the analysis, it was possible to make a profit according to our profit expectations. So the stock behaved really nice, and after finishing actually a long consolidation that started actually by mid of January all the way till actually almost end of April. Now, of course, with nice volatilities, especially here all the way to mid of March, where you could make the profit according to our analysis. Now you see that after finishing this consolidation line, again we had a further decline. So the channel downwards was opening again by beginning of May, and then if you would look further, and now what we see is really a rebound on the trend. And if you look at the bigger scale, you can clearly see that there is a major, let's say, line of the price that is sitting in the area of 10, and of course the price will try to return there longer term. Mid-term there is another level which is just around 764, and now the question is how here we are going to trade, because we see a very nice recovery after having a descending channel here from the beginning of this month. Now we see clear return, but the question is where we go next, because what happened last trading session, we were entrapped between moving averages 20-50, so we finished almost at moving average 20, but didn't go higher than the 50. So now, and we had quite big downward shadow, meaning that we still could do small negative wave, and that would be exact right moment to buy through, because it should be most probably two-step rebounds or before really changing the trend. And here you see MACD is improving indeed, RSI is also improving, but still might go once down before going finally to recover. And that's exactly similar behavior can be seen. Let's magnify a little bit on the stock price as well. So now we see upwards move. Then what could be happening here? A small decline, and then again major recovery. So this secondary decline or V-shape is a very classical, it could be skewed V-shape, very classical behavior for major recoveries. So it could be a final move down, and then actually recovery should start taking place. And this is exactly where we can bet, exactly where we can start buying and expect to buy for. So let's talk now how we can buy. Since there is a small, let's say, bigger, let's say, downward shadow in the latter candle, let's remove those lines now. We can see that the best first entry opportunity, betting that we immediately recover, would be between actually the current ending and all the way to the lower channel here that was formed by 15 of May, but also in beginning of March. So it's here about 582. So the lower part would be 582, and the higher part, higher channel would be 647. So this is the primary channel where we can have a first rebounds, but it's kind of weak, let's say. Still, it's still we put it as a channel because we don't want to miss the possibility to buy there if the final rebounds takes there, but it's still not that strong. The stronger one will be the second one in this case, but again, it's still not guaranteed that we won't recover immediately. So it's better to start buying within this first channel. And how to buy through to guarantee and make sure you have the best let's say mitigation for risks versus profit, but also the best chance to have the maximum profit. We will talk at the end of this video. So this is the primary channel to buy. And then if we have any decline further, what might be happening, we might go a little bit lower, and then there is the second channel from where we could start buying again. You can clearly see here, this is the channel of these levels, just a little bit lower. So this is between 518 and 471. So we can write it here again as a let's say secondary technical channel, and that would be actually the most stronger channel to buy through to have a made before the major recovery. But still we need to take into account, as I said, that at the first channel we could also have the recovery. And then the last one we usually keep for, let's say, risk mitigation if any negative catalyst kicks in. But because we don't have any history of price going lower there, the easiest way would be just to take to imaginary continue this line, because if we have any further decline, then this line should be imaginary continued, and then somewhere in vicinity of that we might have, again, if a negative catalyst kicks in, of course not expected at all, but we just want to keep some funds there as well. Therefore, the best way to keep the price there would be around 405. So let's write it as a last risk mitigation level. So anything that goes lower than 405 would be, let's say, the risk mitigation step. It's not that it is predicted to take place. It's not that we say it is going to happen. It's just, let's just put it lower. It's just that we want to keep some funds to mitigate risks if any price declines. So these are three levels: the first primary, secondary primary, and risk mitigation due to negative catalyst. As I said, the second primary is more stronger one to rebounds, but still it might also take place at the first one. Therefore, the way to buy will be a little bit different here. It's not 5-portion play as we usually discuss, but this will be more 6-portion play, more focusing actually on the middle one. So the way to trade here, to our opinion, is that you could split your, let's say, money in 6 portions that you want to play here. Then you can buy with 1 portion in the first channel. If it's not working, then you can buy with 2 in the second channel. So this way, once you buy, you will have the majority of rebounds. And then if the price declines further, then of course you can, and we go with the negative catalyst lower than 405, then you can buy with remaining 3 portions here to average down finally. And then you can ensure the maximum, let's say, profit taking. And here for midterm traders, the level to expect is 764 for those, or even high, actually all the way to 999. But if you are more, let's say, faster trader, you want to take profit faster, then you can take the profit in the range actually between 10 to 15% here, and then you can just exit and re-enter if needed, or check other opportunities. Also, you can find plenty of videos at our channel as well. And just to let you know that videos placed at our channel, they have the date of issue, but it doesn't mean that it's late already, because usually the situation discussed there starts to take place in a couple of weeks and even longer. So all old videos up to 5 weeks ago are still fresh, in a sense that the situation discussed there might be just happening. So you can just go check those. If you like this opinion, this style of analysis that we do, you could also follow this. But of course, you are the boss to decide, because this is just our opinion on how we would trade, and we just explain how we do trade actually on these stocks. So with this being said, that's all for TRIT. Really nice one to watch. Finally shows the signs of recovery. Still might have one last decline where you can buy nicely. And yeah, that's actually it with this one. So good luck with this one. And if you like the analysis, don't forget to subscribe to our channel, press the bell button. This way you'll not miss our new videos and new interesting discussions for US-based stocks.